All right, hello and welcome to Camel Finance. I'm your boy Camel, and I want to start by asking you a quick question. Is this okay? What do you think, right? I think this is fine, but it's not for me. But let me know what you think. Is this okay? I don't know. I'll tell you something that isn't okay though. This poor guy here has had his YouTube channel of 3 years with over 23k subs and 400 streams, 100 podcasts deleted. I don't really know the full story here. They say it's to do with Bitcoin content promoting illegal activities. Obviously, that is not very nice to hear. It could well be one of these things where it gets resolved in a few days and it's not a problem, or it could be something a little bit more sinister going on under the hood. But I thought I would just use this as an opportunity to point at Rumble and say, just in case, God forbid, the worst should happen to me, you will be able to find me on Rumble. At the moment, I just have this thing set to pull the YouTube videos off of YouTube and stick them on here as and when I upload a video to YouTube. But if anything should happen to my YouTube channel, then you will be able to find me over here. For weeks now, I've been talking about this whole weekly cycle decline. I've been showing this chart pretty much every single video. It's been done to death, but we've had an update from Bob, and he said, as you can see here, he'd be fairly surprised if the weekly cycle top was not now in for stocks. So this should be a week 19 high as of last week's candle, meaning measured from the low here up to the high is 19 candles or 19 weeks. And we should therefore expect another 2 to 3 weeks of decline into that weekly cycle low to flush the sentiment before we can go again. Now, there are times when the pullbacks are long and drawn out. Here's one, for example. This is 6, 7, 8 weeks. This one right here was 3, 4, 5 weeks. And you can see here, this is 2.5 weeks for a little weekly cycle decline. So it could be short and sharp and over with nice and quickly, or it could be a bit more long and drawn out. The 24 weeks is an average. We could see anywhere from 21 to about 26 weeks. So we are going to have to be patient here. But as I've been saying over and over and over again, I believe that weekly cycle decline has started. I believe that once we make a multi-week decline and a multi-week pullback down 5 to 10%, somewhere in that neighborhood, and see a swing, that will be the best opportunity we've had to get long. Breakouts should start to look a whole lot better. But if we take a look at sentiment right now, we are right at max FOMO for the stock market. Traders are all in buying ETFs, chasing this rally higher. And usually when this happens, we do get a decline in the S&P 500 shortly thereafter. So I would think we've got the sentiment at extremes. Remember, the weekly cycle low serves to flush and reset sentiment. So the stars seem to be aligned for a couple of weeks of pullback, and then I think it'll be time to go again. JP Morgan came out on Friday and said they no longer expect to see a recession, and within a matter of minutes, the S&P 500 fell 50 points and erased $400 billion of market cap. Was this a coincidence? I don't really think so. But I wanted to use this opportunity to draw my pendulum again. So here we have the midpoint, right? On this side, we have a highly inflationary environment. On this side, we have deflation, and the pendulum is set in motion and swings from inflation to deflation. When we are in this Goldilocks zone in the middle, it's called a Goldilocks zone for a reason. The reason is things don't look so bad in here, remember. From this Goldilocks zone, it looks like inflation is coming down. We've probably swerved a recession, probably going to have a soft landing, or we've avoided a recession completely. In terms of rate hikes, it looks like we're close to seeing the end of rate hikes. Whether that's a pause or cuts to come is of course to be determined. But in this Goldilocks zone, things don't look so bad. And when things don't look so bad, that's usually when the market will rally. We've been in this Goldilocks zone. We've been coming down since around the lows of October. But of course, when a pendulum is set in motion, it will continue to swing to the other side. And this is why the whole thesis for this blow off top melt up chart that I've had was that we would see the Goldilocks zone occur, we would see this big rally to new all-time highs, and then as the pendulum continues to swing towards deflation, we would see a big deflationary bust. So there's still time, in my opinion, to see this continue to swing. There is still time for us to sit in this Goldilocks zone and reach the all-time high, in my opinion. But it is interesting that I've drawn this multiple times. The other analogy I've used a bunch of times is when you go from boiling hot to freezing cold, there's a period in the middle where it's comfortable, and that is usually when the market will rally. So I've drawn this a bunch of times. If you've been here before, you will have seen this a bunch of times, and you know that I kept saying once we're in this Goldilocks zone, we will start to see the narrative as we get towards all-time highs of no recession or soft landing or no landing, and things will appear like the Fed has engineered a brand new bull market that's just going to go on for years. And of course, that may well be the case. This does not mean we have to enter deflation, but as always, have a thesis, stick to it until proven wrong by the market. So far, so good. And seeing JP Morgan come out and say they no longer expect a recession, to me, just illustrates exactly where we are in the middle of that Goldilocks zone when things don't look so bad. Tells me to keep an open mind about seeing all-time highs after this weekly cycle low decline. And of course, coupled with this, whilst we're in the Goldilocks zone, the labour market doesn't look too bad. The US only added 187,000 jobs in July, which was below the 200k expectation, but the unemployment rate fell from 3.6 to 3.5%, which was below the expectation of 3.6. So despite the fastest rising rates of all time, the labour market remains strong, at least for now, which again speaks to that Goldilocks zone and speaks to there being room for the market to rally ahead into the end of this year. In the shorter term, markets have reversed off the highs on Friday, and the S&P 500 put in a bearish engulfing outside day candle. So during a correction, it's normal for the market to start off strong and end the day weak, and that's exactly what we saw on Friday, of course. This is one of the signs that the correction has not yet run its course, and there may be more downside to come, as we've been talking about with this weekly cycle decline. The real trouble in action that Mark is seeing here is the extreme pickup in volatility of individual names, many in response to earnings. And I've been talking about this in the members only section for the stocks. I was saying these stocks that I flagged, they just don't look like proper breakouts. There's been a lot of chop. They haven't been behaving themselves like a standard breakout would behave. And in a good number of cases, we're seeing things like pivot failures and full-blown base failures. So pivot failures and base failures, these are Minervini's terms. To quickly describe a base failure, for example, we have a rally, then we build a base like this, and then Minervini will draw a trend line above the top and buy the breakout as we emerge from that base. I've also done this trade on plenty of times on this channel, I believe. But the point is, a full-blown base failure would be not only breaking out and failing, but then losing the low of the base. Something like this, okay? So we're seeing this across the board in mega caps. Of course, as mega caps start to break down, you better believe that it's going to drag the indexes down with it. And as I've been saying in the members only section, even these mega caps that look okay right now are probably going to resolve to the downside over the next couple of weeks. We're probably going to see more pivot failures, more full-blown base failures, as the market and the indexes need to correct somewhere between 5 to 10% from their recent highs. So in summary, the market is under pressure. We're cautious here in the near term, as am I, but we would look to buy a market pullback of 5 to 10% on the S&P 500, particularly if and as it can occur into this weekly cycle low time frame. Mark Minervini's long-term buy signal for the S&P remains in effect, and I still think, like I've been saying over and over again, we've got a shot at running the all-time highs and making a new all-time high. Before then, it's time to go Great Reset, Great Depression, and all of that heinous stuff. So it's ever one day at a time, but as you can see, I think we can say with confidence this is likely a top, and we are likely going lower over the next couple of weeks. Now, do not mistake this for me saying the end is near, or that we're going to have a massive 20+% pullback and meltdown. That's not what I'm calling for. As I've been saying over and over again, pullbacks of 5 to 10% seems like the most reasonable thing to expect here. But I do expect to see mega caps roll over. I do expect to see the indexes lower over the next couple of weeks. And out of that swing, out of that weekly cycle low time frame, of course, becomes the opportunity of the year, one we have not seen since October of last year. Over in the world of Bitcoin, Bitcoin is still squeezing, volatility is still compressing, and of course, it does not speak to direction, but it does speak to the explosivity with which the breakout should occur. Up or down is anybody's guess, but this tells us whichever direction the move is in, it's going to be violent. The NUPL, the net unrealized profit and loss, tells us that we have left a bear market behind us and we are now in a bull market, which of course hints and suggests that we should be open to seeing the explosive and violent move that is imminent for Bitcoin come to the upside. And Plan B has noted here that if you're not buying Bitcoin sub 30k right now, that is a similar approach to not buying Bitcoin sub 10k back in 2019 and 2020. And it's also similar to not buying Bitcoin sub 500 back here in 2015 and 2016, and even similar to not buying sub $10 Bitcoin back here in 2011 and 2012. So if you're scared to pull the trigger, maybe do a little bit more homework. The stars do seem to be aligned for a moonshot in the not too distant future for Bitcoin. We are seeing some people start to work out this opportunity. We're seeing a surge in buy-side demand for Bitcoin. Stablecoin inflows to crypto exchanges are now outpacing Bitcoin inflows, indicating heightened buying interest for Bitcoin. You can see that here with the green bar on the far right edge of the screen. And so just before we get into the charts, I wanted to mention this, right? Coinbase says they expect to win their legal battle against the SEC. Now, when I saw this, the first thing I thought of was that old saying that I say over and over again, which is, show me the charts and I'll tell you the news. So I wonder if I hop into this Bitcoin chart, we know a daily cycle low is coming for Bitcoin somewhere in the middle of August. It could even come as early. If I hop onto this chart so you can see it, here is the window, okay? So it could come as early as the 8th of August or potentially as late as around the 19th or 20th of August, but we're almost inside of the timing window where we could expect to see a daily cycle low form for Bitcoin. And when I saw this, I just thought to myself, I wonder if this is the news that gets attributed to the bullish upside that we'll see out of that daily cycle low. So show me the charts and I'll tell you the news. The charts say we're going to get a continued decline in somewhere into this window and then a reversal out of here. And I wonder if that is the point at which Coinbase suddenly beats the SEC and the SEC can crawl back into its hole and hide away there for a while. For me personally, this is one of the biggest 60-day cycle lows of my entire Bitcoin career, because this is going to be testing my primary hypothesis and my primary thesis for what I expect to see out of Bitcoin. As I've been saying over and over again, get into this neighborhood and do anything apart from come out of here swinging in a parabola, an explosive parabola, then I will be scratching this one off and saying, nope, nice idea, but that's not happening. And then it will be time to go to establishing a plan B, which initially will be, as I keep saying, trading sideways into the halving and then trading a 4-year cycle as always. That was always the chance if we do not come out of here as well, that we have to be entertaining much, much lower numbers. As ever, one day at a time, let's get inside this timing window, let's make a swing, and then let's see what the market will give from there. I still am championing this idea of a massive rally to new all-time highs this year for Bitcoin. But of course, if we do not come out of here and move straight up, then we will have to accept defeat on this idea. So in summary, getting dangerously close to that daily cycle low for Bitcoin. We are getting ready to go long out of a swing here. As you can see, I've got my long position lined up, ready to go as soon as we can make a swing. I wonder if we're going to get a touch off of this support line, or perhaps we're just going to start to set a new steeper incline for the price of Bitcoin. We can drag this long over because we're still pushing this initial long, as I'm sure you know. So it's going to be a very interesting couple of weeks for the price of Bitcoin. Ethereum's still hanging around doing a whole heap of nothing, so we'll keep pushing this and potentially even add if we can get a cycle low for Bitcoin show up. XRP seems like it wants to come back and back test the top of this range that I've got in green. So I've been saying all along, we'll keep pushing this trade. A back test is absolutely fine. That's still bullish. But of course, break down below that and we'll cut this trade and sit on the sides and wait to go again. The crypto related equities, I think, are going to give us a nice entry here. This is a very orderly decline for Coinbase. Let me come off of log so we can really see what's going on. You can see here, this is a very orderly decline for Coinbase. We're now right back into the top of the range break. So that's a breakout, retest of the range break before we go again. To me, this seems like it's about to give us a very nice signal. That daily cycle low for Bitcoin is due somewhere around where the end of this long position is marked. So I'm going to pull this back a couple more days, still push this trade, come in here and line up another long, which will look something like this. And of course, if we can get this set up, if we can break out of this and bounce off of support, then we'll add a position. And at this point, it'll be time to move the stop from the first position up underneath here. And then it will be a case of figuring out whether or not Bitcoin is going to do Bitcoin things and shoot straight up, in which case we can push all of these crypto related equities. But if Bitcoin fails, if Bitcoin starts to base and go sideways, it will be time to reduce this exposure that I've got across these 4 assets. So here's MicroStrategy. It's quite a similar deal for MicroStrategy as well. For now, we're pushing both of our positions. We'll even be looking to get a third position on the go out of that 60-day cycle low for Bitcoin if it can give us that. But it will be important to move the stops up so that they're all underneath here, just in case Bitcoin decides to base and go sideways and have a standard 4-year cycle repeat. The same is true of Riot. So again, I'm still pushing this trade. I think we can redraw this trend line now, something like this. That seems to be much more reasonable. I think we can pull this one back. We've still got our first and second positions. I'm going to continue to push these into that 60-day cycle low for Bitcoin, which is due any day now, as I've been saying. And again, we could possibly even entertain buying a breakout of this downward sloping red resistance line and moving the stop from the first 2 positions up to the third, which will allow the first couple of trades to finance the risk on the third trade. And we will have at this point built a massive position in these crypto related equities. So it will be important to respect the stops so that no matter what we get out with some profit, if Bitcoin is going to do Bitcoin things, if I am going to turn out to be correct in this thesis, where's my chart? And if this is what's coming next, then those crypto related equities are going to make me an absolute fortune. But like I say, I am taking a big risk here, because if this doesn't pay off, if we do end up scratching this one off and we start to go sideways, then of course I don't want to be holding all of those crypto related equities whilst Bitcoin does this, because they're probably not going to perform too well. So it will be a one day at a time sort of situation. Here's Marathon as well. So just in the interest of covering all 4 of these, we're probably going to end up having a long position, something like that. It's exactly the same deal. If we can get a breakout of here, then we'll put this something like this. We'll move the stop up from here to underneath here, and then we will allow the profit from the first trade to finance the risk on the second trade. We will have plenty of exposure, And I will look like an absolute genius if Bitcoin does indeed have this huge melt up move. These stocks will probably do another 2 or 3x from where they are, and I would have built up these massive positions all along. But again, we need to make sure that I don't get too punch drunk here. I need to make sure that I respect the risk. I don't oversize. I make sure that if all of these positions get stopped out, it's not going to take a massive chunk out on my account. I think I've got far enough underneath these squeezes now. I think I'm far enough under here that even if we add third positions across the board and move the stops up, I'm still going to be able to walk away with a decent profit. But of course, what I want to see is for Bitcoin to do Bitcoin things and for all of these to have massive, massive high beta performance against Bitcoin. So anyway, that is the crypto and the crypto related equities covered. As I said, it's going to be a patience game into those 60-day cycle lows. But once we get into those neighborhoods, I do think there's one more opportunity to add here. And then hopefully we can sit back and see what the market will give from there. The stock charts, you know the deal by now, right? We're expecting this decline down into a daily and weekly cycle low. Is some level of counter trend bounce at some point reasonable to expect? Yes. Are we still going to be looking for that classic two drives pattern into the swing low where we come down, counter trend bounce, undercut the first low, make a swing, mark that as the cycle low, and then get long on the swing? Of course, that is how we do it. I also want to be looking to see if I can draw some kind of trend line and buy the breakout of that or use that as an invalidation level. But that has not yet been set by the market. So for now, you can see the stop here choked up. Either way, we're walking away with some nice gains and then getting ready to sit on the side. I do think we could make it all the way down to around 41.50 and still maintain bullish structure for the S&P 500. NASDAQ, look, so far so good, right? I ducked out of this trade for a little bit of profit instead of letting it get stopped out. So far, it seems to be on its way down to at least this yellow, if not this red line. So to clean this chart up, I'm going to get rid of this blue one because I don't think we need that anymore. We have got a downward sloping blue resistance line established here. We've also got this big level here in blue, which is horizontal. So one of these yellow or red touches seems perfectly reasonable over the next couple of weeks, something like this. And then I think we can go again. Similar story for the Dow, locked in a little bit of profit from between here and here. That seems to be the right move so far. There will be a trade set up out of this, whether it is a back test and a go, or whether it's some kind of two drives pattern, and then we draw a trend line and buy the break. There will be a trade setup, but I need to see more candles before I can let you know exactly what that trade setup is. We're out of Apple, and of course, respecting the trend lines has done well. So we lock the profit in between here and here, and now we sit patiently on the sides. Some kind of counter trend bounce that comes up and then establishes a trend line for us to buy the break of, something like this would be quite nice to see. Of course, that would be easy to trade. But for now, again, we need to see more candles. We need to sit patient on the side and see what can happen. The same is true of Tesla. Probably going to roll over, and then we'll look for some entries as we get later into this weekly cycle decline. Lastly, I want to do the dollar and the metals. Here's the dollar, right? So is this breakout retest looking for that resumption higher, or is this about to roll over and move lower? The gold cycle says that this should come down. And if I hop into gold, you can see we're well late now in the daily cycle, still pushing this initial long. So that's absolutely fine. If we can get a strong push out of here, I think we can go long and add a second position. If not, we'll use the downward sloping green resistance line and buy the breakout of there and add a position and move the stops up from there. So I think it's about time to see a bounce out of gold, but of course the market doesn't want to show us that just yet. The same is true of silver. We're right back to the initial entry level. So I would think gold is probably going to bounce out of that cycle low, and I would think we're probably going to come up and break out of here. But a couple more candles and we should know what's going on. Of course, the dollar may well persist as a problem child for a little while longer. So that is your weekend deep dive TA. Unfortunately, I'd love to be able to say, yeah, let's go and buy this, let's go and buy that, but we're just not there yet, as you can see. So a couple of weeks of patience, a couple of weeks of repeating myself, and then there's going to be plenty of opportunity. There's going to be plenty of longs to come. I'm looking forward to adding to those crypto positions and the crypto equities. I'm looking forward to adding some NASDAQ longs and Dow and the S&P and all of that good stuff. I'll put some stock call outs as well for non-members. And I'll pick some very, very nice individual setups for the members only. Of course, only trades that I will be taking. I won't just be throwing random trades out there for no reason. So again, a little bit of patience will go a long way. It's only a couple of weeks from now. And in the meantime, enjoy your weekend. Take care from me. All the best. Cheers. Bye.